Hey everyone, welcome back to Corporate Decoder, where we dive into the nitty-gritty of corporate filings to uncover the real stories. Today we're dissecting a report from the Federal Home Loan Bank of Chicago, and let's just say Therese a little shake-up happening in their leadership, and you'll want to know who's taking the wheel. Before we jump in, if you enjoy getting clear, no-nonsense insights from these SEC documents, hit that subscribe button. And don't forget to join our Discord community, linked in the description below for even more discussions. So, what's the big news from the Federal Home Loan Bank of Chicago? Well, it looks like they're getting some new faces on their board of directors. These are the folks in charge, steering the ship, and their choices in leadership can tell us a lot about where the bank is headed. It's not just about who's in, but also about how they're chosen, and what that means for the bank's future operations and its relationship with its members. Let's get straight to the appointments. They've elected Bradley J. Schroeder. He's currently the chairman, president, and chief executive officer of DMB Community Bank in Wisconsin. He's stepping onto the Federal Home Loan Bank of Chicago's board for a 4-year term starting the 1st of January 2026 and going all the way through the 31st of December 2029. This is significant because he comes from a community bank, and the Federal Home Loan Bank of Chicago is all about supporting its member banks. His experience will likely shape decisions concerning credit and other services offered to these member institutions. Next up, we have some continuity with re-election. Phyllis Lockett, who is the CEO of LeapX, has been re-elected. She's staying on board as an independent director for another 4-year term. Also from the 1st of January 2026 to the 31st of December 2029. Having experienced directors like Phyllis back on the board can provide stability and a deep understanding of the bank's complex operations and its regulatory environment. And we have another new independent director, Mary R. Wright. She's coming in as a public interest independent director, also for a 4-year term starting in 2026. This role is crucial because it means she's meant to represent broader public interests, not just the interests of the banks that are members of the Federal Home Loan Bank. This diversity of perspective is designed to ensure the bank operates with fairness and consideration for the wider community it serves. Now, the report mentions that the board hasn't finalized committee assignments for these new and re-elected directors yet. This is pretty normal after an election. What's important here is that directors working on various committees, think audit, risk, or compensation committees, are where a lot of the detailed oversight and decision making really happens. We'll have to wait and see where these new members land to get a fuller picture of their influence. Regarding compensation, it's stated that all directors in 2026 will be paid according to a new compensation policy that hasn't been fully approved yet. Directors also have the option to defer some of their pay. This is pretty standard practice for boards, allowing individuals to defer income for tax or investment planning purposes. The actual figures for director pay won't be known until that policy is finalized, but the mere existence of a deferred compensation plan signals a commitment to attracting and retaining experienced professionals. Therese also a section that explains the rules around who can be a member director. They have to be an officer or director of one of the banks that are members. This makes perfect sense for a cooperative like the Federal Home Loan Bank. They conduct most of their business, like loans and credit services, directly with these member banks. So, it is common for the bank to extend credit to members whose leaders might also be on the bank's board. The report emphasizes that these transactions are done on market terms, meaning they are no more favorable than what any other member would get. This is a key point for transparency and avoiding any appearance of favoritism. The actual results of the director election were declared on the 24th of November, 2025. The details of these results are actually provided in a separate letter to the members, which is attached as an exhibit to this filing. This means the voting itself concluded before the announcement date we're looking at today. And that brings us to the exhibits. The most important one, Exhibit 99.1, is a letter to the members dated the 1st of December 2025. This letter likely contains the full voting results and further details about the election outcome. It's essentially the official communication that goes out to all the member banks explaining who got elected and perhaps some welcoming remarks from the leadership. Looking at this filing, it's primarily about leadership changes and the election process. There aren't detailed financial tables in this particular report, which is common for an 8K filing that mainly announces significant events. The numbers that truly matter for the bank's financial health would likely be found in their quarterly 10Q or annual 10Q reports, which we've covered before. What we're seeing here is more about governance and strategy, the appointment of directors, especially with different backgrounds like a community bank CEO and a public interest director, signals a deliberate effort to balance the needs of its member banks with broader community considerations. This approach is essential for a regulated entity like the Federal Home Loan Bank. The main takeaway here is about the future direction of the bank as shaped by its leadership. The addition of Mr. Schroeder with his direct experience at a member bank, suggests a continued focus on serving the needs of their client financial institutions. Miss Lockett's re-election offers stability, and Miss Wright's role as a public interest director highlights a commitment to stakeholder accountability beyond just the member banks. The risk here, if you can call it that, is the usual one with board changes, ensuring smooth integration and continued effective governance. So that is our breakdown of this Federal Home Loan Bank of Chicago filing. What's your take on these leadership changes and what they might mean for the bank moving forward? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more deep dives into the corporate world. And don't forget to check out the link in the description to join our Discord community. Thanks for watching, and we'll see you in the next one.